Builders, your deposits are not income. When you receive a deposit for a large project, you should not be counting that as income. I'm Nick from Income Digs. We're going to talk about how we can treat deposits in our accounting software, Quickbooks Online, to ensure that we're not overstating our profitability on a project. This is absolutely key to make sure we're conservative about tracking our financials. If you want to get into the weeds on this and go really deep and become an expert on QuickBooks Online for your building remodeling business, if you're a bookkeeper serving that industry, check out Builder Books Academy. And let's get into it. So when we are building large projects, it's very common for us to receive a large deposit, often many months ahead of the project starting. So what do we typically do when that happens? I have a project up here in QuickBooks Online. What we typically do is we add an invoice. I say typically, this is not what I'd want you to do, but this is very common that we see, okay? I'm going to do this all of 2026 just to put it out into its own year here. So what we commonly do with an invoice is we'll do something like residential remodeling, some kind of income we're going to put on our invoice. We're going to say, this is a 40% deposit. Okay, so let's say that we think that the project's going to be $500,000, large interior remodel, something like that. So I'm going to do 0.4 times 500,000. Okay, so there's my 40% deposit, $200,000. Okay, and we would certainly want to make that. We want to receive that money, no question about it. But where do we count that when it comes to the profit and loss balance sheet? Let me just save and close this transaction. If we do this, I'm just going to save and close. I don't want to send it, so let me just turn that off. What we're going to see there is that it's going to show up on our project report. Okay, and so as of this date, I've got $200,000 in income. And on my balance sheet or my profit and loss, I'm going to show $200,000 in income. Well, this project might not start for another year. Okay, so is this the right way to treat this big check that we have coming in, $200,000? No, is the answer, for two reasons. One, it's not income yet. The project hasn't started. And two, we don't want to overstate our income from an operational standpoint. We haven't incurred any costs on this. So this is what we talk about as far as work in progress, invoicing, work in progress reporting. I don't want to do anything with $200,000 until the project has started and I've started to incur some expenses. So what we do instead is, instead of putting it toward income, we're going to instead move it to a deposit or a liability. Basically, we're going to receive the money. Okay, that's fine to receive the money. There's nothing that we shouldn't do there. We're going to do project deposit. Okay, and that in our products and services, that's going to go toward a liability. I'll show you that in a second, but we're going to do the exact same thing when it comes to the 40% deposit. And your customer doesn't care. They don't really know the difference here. They're going to see the 0.4 times 500,000. Okay, they're going to pay the same $200,000. For them, it's still a invoice that they owe. Okay. So now if I go to my project details, I don't see anything on it. Why not? Well, I didn't make any money yet. If I refresh my balance sheet right over here, what we're going to see is that $200,000 should flow into some kind of liability account. Okay, something like project deposit, something like that. Okay. And I did 20,000 instead of 200,000, so my bad there. But let's just pull this up here so we can see where it goes. This is my liability account. Okay, that's where we want to park that money, at least for now. How do we set that up? When we're looking at our products and services, we need to have a deposits product or service, okay, or a cost code for our deposits right here. And when we do that, we want to make sure we route it to project deposits. It says income account, but it's actually an other current liability. Basically, it's going to sit there. And then what we're going to do is we're going to incur expenses against the project. And by the way, it still shows up as accounts receivable here, just not as income and costs. So let's incur a few expenses on this project. Okay, just like we would normally do. We got the deposit, let's start the project, okay? So we incur some expenses. Let's just use our items here. Say that we pay for the permits. Okay, this is billable. Let's say that we're doing a cost plus project. I'm just going to whip out a few of these real quick. So we'll do save and new. We did permits. Let's do our maybe our site work or excavation. Okay, we've got 40,000 there. Okay, mark it up 43%, whatever. It doesn't matter here. This is 34 Parkside is my project. Let's do a couple more. So let's do rough electric, and that will do it. We should set our default markups. I'm not doing that right now, but follow along here. So there's my project, save and close. So now I'm incurring expenses, okay? And I'm working along, and two things should happen here. We should be invoicing frequently as we incur expenses to kind of get caught up, right? So right now I'm showing a negative net income of 51,000. So we got to make sure that our income cycle, or our billing cycle, our invoice cycle, is frequent enough that we can recoup these costs and add our markup quick enough so that my reporting is not thrown off, okay? Now we could potentially journal entry over some of the $20,000 deposit if we really wanted to. My preferred way of doing it is keep that conservative, keep that out of our income until the final. So what I might do is I might add an invoice to this project, and when I add an invoice to the project, it's going to suggest all of my billable expenses here. Let's grab a couple of them and add them in. Okay, so now I'm adding the cost plus the markup. Everything's kind of flowing in. I'm going to save and close that. I don't want to send it, same kind of thing. I'm going to save and close that invoice just to see how it impacts my project profitability. And you can see now I got 15,000 compared to the 51,450. And what we're going to do with that deposit, what I like to do on that deposit is we credit it back on the final invoice. All right, so all we do is final invoice of the project. Let's say we're done. And I know, obviously, my numbers aren't working out to be exact here. I'm going to do an invoice, the final billable piece here. We add that. And then the last thing we do is we simply add a line, okay, where we do project deposit, okay, and here we have $20,000 on our books. So let's say we return the deposit, okay. They don't owe us; they owe us everything except for that $20,000 that they already gave us, okay. So we do a negative $20,000 right there. So that net invoice is going to be $37,200. I'm going to save and close this. And what will happen now is my profit and loss will start to take shape. Okay, so I've got the billable expenses, I've got my markup, this uncategorized, I'm not sure what that was, something with my products and services, but we can see my profit margin starts to take shape, and I've returned that deposit. If I go over to my balance sheet again, I've got the 20,000. If I drill down into that, we see that it was initially added. Okay, it was initially added at the start of the project, and then it was taken out at the final invoice. All right, that's how we should be treating invoices. At the time that we receive them, it should go to our liabilities, and not until we start the project do we move that over to revenue. My favorite way to do it is at the final invoice to credit it back. Another way that you could do it is you simply do a journal entry, okay, at the beginning of a project or at some point during the project where we're moving that deposit over. Okay, so that you could do as well. But if that's the case, you got to make sure you track it for your customer. Okay, so understanding what to do with deposits, understanding the differences between liabilities and revenue is really, really important to ensure that we're showing an accurate profitability. In a follow-up video to this, we're going to show how we do WIP reporting and how we can move revenue in or out of our projects based on how much work we've actually completed. So check that out as well. But in the meantime, check out BuilderBooks Academy, everything that has to do with QuickBooks Online for Builders, and the new course coming out for Builder Trend Accelerator. Check that out as well. Love to hear your comments, and I'll see you on the next video.